clients and friends, Courtnie Gray from Good Life Financial Advisors. Thank you for joining me for a quick update. I wanted to take a few minutes to talk about the recent market volatility. I've actually recorded this message a few times because, as you can imagine, things have been moving quickly. We saw a sharp sell-off followed by a sharp rally, and sometimes we say, the faster they fall, the quicker they rebound. Lately, the markets have been swinging rapidly in response to both good and bad news. It all comes down to one thing, and most times market volatility does come down to one thing, and that is uncertainty. Tariff concerns have played a role, but with those conversations now on pause, we're hoping for a bit more clarity, and we're already seeing the markets respond to that. We can also look back to late 2024 when stock valuations, especially in the AI-related space, started to look a little bit stretched. That correction started to roll into early 2025, and it kind of took a little bit of a bite out of the initial market momentum that we had. It's important to remember a small group of stocks like Amazon, Microsoft, Alphabet, Nvidia, Meta, and Tesla, they were responsible for such a huge part of the market's recovery after 2022. So when those areas of the market started to cool off to start the year, it really pulled down the rest of the market. They make up nearly 30% of the entire market capitalization and contributed to almost 50% of the total return that we had just last year alone. So just 7 stocks were able to contribute to that much of a return. So when we saw things pull back in those areas, it did move the markets to start the year, and then of course the tariff took over from there. But what is working? Asset allocation. Many of our bond funds are performing well, even showing some positive returns despite some of the interest rate movements that we've had. But asset allocation as a whole is working. So if you have any bit of bonds or, obviously cash in your portfolio, it is definitely helping to calm the portfolios down and stabilize things a little bit. If you want to get out of the market slightly, I wouldn't recommend all of it because, as we know, we want to take a long-term perspective on things, that we don't want to panic and sell. But if you want to scale back risk, you can absolutely reach out and we can have a conversation about that. But it's important to remember, most of the money that you have invested in the market, it's not needed all in one day. It's usually meant to stretch over a 25 or 30-year retirement. And the best place to have money to grow for long term, meaning the money investing for the long term, really is the equity market. So we don't want to abandon equities altogether, especially in times like this. The worst thing that we could do is sell, when things are down. But if you want to scale risk back and slightly adjust in the short term, absolutely reach out. It's also important to remember that we've been here before. We went through 2008 together. We went through COVID in 2020. And the S&P returned pretty much all of what it lost in about a 5-month time period during those months. And we also just went through 2022 together, where we had 10 straight down months and an 18-month recovery. We were back. So I know we can do this again. Everything is going to be fine. We just need to take a deep breath and remember that we have to look at this as a long-term approach, and not everything is needed just today. So let's take a broader perspective of this. Things will calm down. The markets are resilient. With patience and discipline and a long-term mindset, we can recover. Don't hesitate to reach out if you need anything. Our team here at Good Life is available if you have any questions. And you have my number, you have my email. If you would like to call Barbara Jean for an appointment, her number is 610-628-2029. And you can get in touch with her. And from there, you can book an appointment and come in to see me. I hope everyone stays well and stays positive.